Hold on to your trading apps because the numbers are in and they are massive. We're talking about one of the hottest stocks on the market today, Robinhood. This company, which famously got its start disrupting Wall Street, just delivered a blockbuster earnings report that blew past what almost everyone expected. If you thought this was just a flash in the pan meme stock story, you need to pay attention because this business is transforming right before our eyes. Let's start with the headline numbers for the third quarter. The firm reported total revenue of $1.3 billion. Wall Street analysts were only expecting about $1.2 billion. That means the company didn't just meet expectations, they crushed them. This revenue figure represents 100% growth compared to the same time last year. That is doubling the business in 12 months. But wait, the profit story is even better. The net income for the quarter came in at a staggering $556 million. That incredible profit figure nearly quadrupled year over year. Think about that. Almost four times the profit compared to last year. On a per share basis, earnings hit 61 cents per share. Analysts were predicting just 54 cents per share. When a company beats on both revenue and earnings by this much, it confirms that the underlying business strategy is working. So, what is driving this explosion of growth? It is a mix of high octane trading activity and smart business diversification. Transaction revenue, which is basically the money they make from people trading, surged to $730 million. That alone increased by 129% compared to last year. This increase was powered by three key areas: options, equities, and cryptocurrencies. Cryptocurrency trading is absolutely essential to this company's bottom line. Their crypto trading revenue in the quarter was $268 million. That is a 300% year over year increase. Total crypto trading volume reached an immense $80 billion. This isn't just riding market volatility either. The company has been aggressive in building out their crypto footprint, including moving into staking services and acquiring major players like Bitstamp. They're also pushing into tokenized assets in Europe, where they are actively seeking regulatory licenses to expand their crypto offerings across 27 countries. But it is not just digital assets powering the engine. Revenue from options trading hit $304 million, up 50% from last year. Equities trading revenue jumped to $86 million, up 132%. Beyond trading, they are making a ton of money just on interest. Net interest revenue surged 66% to $456 million. This income comes from the growth in interest earning assets and security lending activity. And let's talk about their premium customers. Their gold subscription service is on fire. 3.9 million users are now gold subscribers, representing a 77% year over year jump. That subscription model gives them predictable, recurring revenue, which Wall Street loves to see. This company is not sitting still. They are aggressively rolling out new products that are turning them from a trading app into a full-scale financial services platform, a massive ecosystem for the next generation of investors. One of the most exciting new areas is prediction markets. They have teamed up with Kalshi to launch event contracts, allowing users to trade on the outcomes of real-world events, including sports, politics, and entertainment. This is huge for generating engagement. CEO commentary highlighted that prediction market revenue was estimated at about $20 million for the third quarter, and the forecast for the fourth quarter is even bigger, expecting revenue to hit $50 million as they benefit from the full football season. Users have already traded more than 4 billion event contracts in total, including over 2 billion in the third quarter alone. The overall strategy is clear: capture the next generation of investors and service their entire financial lives. They now have 26.8 million funded customers, an increase of 10% year over year. Their average revenue per user, or ARPU, hit $191, an increase of 82% year over year. That means they are making significantly more money off each customer compared to last year. The company is expanding well beyond brokerage, moving into products like a credit card, banking services, and even wealth management through managed accounts with low annual fees. They're even making it easier for users to access fiduciary advisors through a new partnership. They are positioning themselves to be the go-to financial hub for millennials and Gen Z investors who started investing much earlier than previous generations. This positioning is critically important because roughly $124 trillion in wealth is expected to transfer from older generations to younger ones over the coming decades. And this company is sitting in the perfect spot to capture a disproportionate share of that massive shift. It is no surprise the stock has been an absolute rocket ship. After being added to the prestigious S&P 500 index in September, the stock has surged more than 250% this year. This incredible momentum has analysts boosting their expectations, with several firms raising their price targets to well above the current trading price. Some analysts have targets as high as $170 per share. However, we have to look at the risks because Wall Street is divided. The huge run up in the stock price has left it trading at what some believe are wildly expensive valuation levels. The forward price to earnings ratio sits at about 82 times. When you compare that to the broader S&P 500 index, that is extremely high. Some analysts are cautioning that the stock is now meaningfully overvalued. Its price to book ratio is about 15.4 times, which is vastly higher than the industry average of about 2.4 times. These high valuation metrics mean that the stock needs perfect execution, and the growth needs to continue unabated for years. If the market rally slows down or if trading volumes fall, the transaction heavy revenue stream could suffer. The company also continues to face serious regulatory scrutiny, fines, and investigations across jurisdictions, which adds compliance risk. Despite those long-term risks, the core takeaway from this latest report is that Robinhood is executing their strategy flawlessly. They are closing the gap with major competitors, rolling out advanced trading tools like short selling, and pushing into every financial service vertical they can find. Management is already signaling that the fourth quarter started strong in October with record trading activity in equities, options, futures, and prediction markets. The growth story is real. The numbers are huge. The shift from a simple trading app to a comprehensive financial platform is gaining serious traction. This company is clearly redefining what a financial institution looks like for the internet generation. And right now, that is translating directly into record-breaking profits. That's the breakdown of the massive earnings report. If you found this information useful, make sure you hit that like button, subscribe to the channel for more straight talk on finance, and ring that bell so you never miss another update. I'll see you on the next one.